Shibani Sircar Kurian is now joining us along with Kunal, who will join us in a minute. Nuresh, of course, is here. Gentlemen and the lady, thanks very much for your time. Shibani, afternoon. Let's start with you. Do you expect first quarter numbers overall to be a strong one, or do you expect the top line to start flickering a bit, because there is a section of the market which believe that FY25 in isolation should be okay, but FY24 versus 25 on numbers may not be a big move?
Yeah, so hi, good afternoon, first of all. So when you look at markets and earnings per se, you're right that FY24 was a great year from an earnings perspective. And if you look at Nifty EPS growth of almost 24%, that is actually higher than what consensus was building in at the start of the year. So overall earnings delivery was extremely strong. Now, on that base, when we look at FY25 and 26, a mid-teen sort of an earnings growth expectation is also strong in the context of the growth that we have come off. So yes, from an absolute number perspective, earnings growth is likely to be mid-teens, but the overall trajectory of growth remains strong. Now, in that context, what you pointed out is correct. The top line growth overall has been muted, and a lot of the earnings has been driven by margin expansion. Now, from here on, the pace of margin expansion vis-a-vis in FY24, FY25 vis-a-vis FY24 should be lower, given the fact that a lot of the benefits that we've seen from commodity prices and input costs have been already seen in FY24. And therefore, you now need to see top line growth come back. And in that context, the revenue growth trajectory becomes important. But having said that, if you look at sectors such as automobiles, industrials, to some extent, even sectors such as banks, the domestic facing sectors, manufacturing, for instance, overall growth trajectory in terms of earnings should remain fairly stable. I think one sector to watch out for will be IT, where earnings expectations are muted as such. And of course, first half for the sector is a seasonally strong segment, and therefore IT is something that we will watch out for. But by and large, most of the domestic facing sectors should be able to deliver fairly strong earnings for FY25.
Okay, so that's a view coming in. IG sector definitely something to watch out for ahead of the earnings season. But let's take the stock of the technicals as well. Nuresh as well as Kunal with us. Kunal, on the IT sector, Shivani is quite positive from the point of view of the fundamentals, and some of that commentary of the brokerage houses will also come up for you on the screen, because quite a few brokerage houses are treating it as glass half full rather than empty. Yes, there has been no material change in the structural story as such, but Bank of America believes that there's going to be fewer instances of incremental cuts to the IT spends. We'll shortly get those lines for you up on the screen. Morgan Stanley believes that second quarter commentary is going to be positive. UBS believes it's going to be more of a tactical trade and not really a structural story. CLSA says that discretionary demand stabilizing is something which is positive. They're expecting no further cut in guidance. JM Financial believes maybe -2 to +2 kind of number is what we see for large caps. But that's the view right now, at least no incremental negative. And that's something we've been calling out for the last couple of quarters as well. But the stocks hadn't done any better. This time around, is it different, Kunal?
It's very much different, Anisha. So just to give you a context, last month we were 7,000 points away from a life high for the IT index. Right now we're just 1,500 points away, from the IT index to hit a lifetime high at 38,500 plus mark on the spot levels, which means that this last 1 month there has been a very good recovery for the Nifty IT index, and it's been led by large cap names. And apparently it's not the likes of TCS which has done the major heavyweight in terms of price gains, but you have the other stocks, the likes of Tech Mahindra, which has done pretty well. You've seen Wipro doing exceptionally well, more than a 15 to 20% jump in the last 1 to 2 weeks alone. HCL Tech has done remarkably well. The mid-cap IT stocks have been quite strong. In fact, many of the mid-cap IT names are coming back from a divergence of 15-20% below their 200 moving averages to now break past about those levels, and even some of them have even rallied above their 200 DMA. So that's a very steep kind of an outperformance which has come back. And historically we've seen that whenever the IT index or any kind of an index, when it recovers more than 50% to 60% of a major corrective wave, the worst seems to be out, and then the indices or the asset classes look out for a retest of the previous high. So I would believe that potentially over the next 1 to 3 months, you should you should see 38,500 being scaled for the Nifty IT index.
Okay, 38,500. So solid almost 2,000 point rally on the cards for our IT sector. But what about the auto sector? Because the June data has come in more positive than negative. The expectations were muted. So yes, the downside was limited, but at least they managed to surprise a bit. Naresh, from the auto vertical, anything that stands out?
So in terms of autos, one name which I'll be putting close on radar is Tata Motors. The stock, after making the top around 1050, has made a range between say 930 on the downside, 1030 on the upside. So once it crosses that, that would be a short-term breakout. The other names have already done well, so waiting for a dip rather than buying at current levels. The momentum has been strong across the board. Maybe a Maruti would still come into picture because it's given a reversal today from the 12,000 mark. That could slowly scale up towards 13,000 again. But the most interesting name going forward could be Tata Motors.
Right. Shibani, I want to talk about some late stage cyclicals from the real estate space. Look at how this Kajaria has actually come back. If I could for reference sake tell you, the long-term chart of Kajaria, it is actually crossing the levels, its previous life levels at 1265 odd. So, and this has come back after 3-4 years gap. It coincides very interestingly to the commentary the management made previous quarter that perhaps worst is getting over, and they being the leader of the tile perhaps is actually calling out the sector reversal. How do you look at the valuations of the tile space? Kajaria perhaps is the only one very serious right now, maybe Somani among the funds fraternity, but there are smaller ones. How do you see Kajaria or this sector, Shibani, or this space?
Absolutely. So if you look at the entire building materials segment and specifically the tiles piece, this sector has actually underperformed despite the fact that you've seen significant growth where real estate is concerned. Now, what we believe is that when you have real estate sales pick up in a big way, the demand and the volume growth for the building materials sector usually follows with a lag. Now, this has also been a sector where you've seen the organized players gain market share over a period of time, so that unorganized to organized segment shift has also been seen. And as the overall real estate sales translate into a later stage where you start doing your interiors, etc., that's when the demand starts for segments such as tiles and other parts of the building materials piece. And therefore, while volume growth has been muted in the last few years, and that has impacted the stock price performance, we do expect that now, given the strong momentum on the real estate side, the overall volume growth start to pick up. Now, in this sector, we've also seen that margins have improved because of lower input cost pressures. And as volume growth picks up, the operating leverage will also help in terms of driving margin improvement further. And therefore, from the overall real estate space and building material segment, valuations in the building material space today appear to be far more favorable than what it has been for the real estate space, given the kind of sharp run up that you've seen on the developer side. And hence, in pockets of building materials, we are fairly positive given our expectations of improvement of growth and fairly reasonable valuation.
Point taken. So that's about some of the real estate and building material plays. But Kunal, what's happening to the likes of MGL and Castrol? MGL has been doing quite well for itself for the last 3 to 4 trading sessions. Today up 8% and on good amount of volumes, one would say.
Yeah, in fact, last 2 days the stock has seen a very strong set of volumes, and you look at the price action. So earlier, you look at the last 4-5 days also, the volumes were a lot more, smaller for MGL, and the price action was also limited or constrained into a range. But the moment you've seen the volumes moving up higher, the stocks have done exceptionally well. It's a classical case of a breakout, a price volume breakout. 1600 levels was the previous resistance for MGL, and that was in the month of February. So which means after a span of almost 4 to 5 months, the stocks have given a breakout, and this could potentially be an up move candidate for at least another 8 to 10% higher from current levels, which means 1850 approximately could be a target range for MGL. Castrol on the other hand is something very interesting. This is something which I have been tracking over the last 1 to 2 weeks, and especially from the point when the stock had come back above its 200-day moving average. I think that was around 192, 194 mark for Castrol. And then post that, the stock had seen a gradual uptrend, slight increase in volumes, but today's price move indicates that the stock is getting ready for a breakout yet again. So this consistent propensity of the stock to try and come back into a resistance breakout, I think eventually would lead into the stock breaking up higher and moving up into a fresh uptrend. So looks attractive for a potential target of 230 approximately.
Okay, so both Castrol as well as MGL look quite interesting. Before I take it across to Somit, who will be joining us shortly, a quick word from you, Shibani, on the entire oil and gas space, because one would have assumed that, even the other OMCs had run up quite a bit, but clearly, at least in some of them, there is still value on the table.
So absolutely, if you look at the entire sector, valuations are quite favorable. In terms of oil prices, our view is that prices would be fairly range bound. Of course, if there is any geopolitical tension that comes through, that is something that would have an impact. But as of now, we do expect that oil prices would remain fairly in a range. Now, where we have looked at, if you look at the entire portfolio and the segment, our allocation prefers spaces on the gas transmission and utility companies where there is significant scope for volume growth. As it is, if you look at in terms of the entire energy basket, the share of natural gas has been increasing, and therefore, structurally, this is a segment that we are positive on. On the OMC side, you are right. There has been some degree of volatility where, at least on the refining side, but marketing margins continue to hold up well. And if oil prices stay within a particular band and remain range bound, valuations do appear to be fairly reasonable.
Point taken. But Somit is now with us. Somit, help us understand what's going on with MGL. Last couple of days, that stock has been on fire.
Well, yes, MGL remains the stock in focus. The stock has been gaining for the last 5 consecutive sessions. It is at an all-time high. Today's intraday move is the highest intraday move that we have seen since November 2020 in the last 5 sessions. The stock is up nearly 17% and for a very brief period of time today in trade, if you see, the share prices of MGL were even above the highest target price on the street of around 1,730. But some time back, Citi came out with a recent note on MGL in which they have actually increased the target price to 1,859 from 1,550, and they have maintained their buy rating on the stock. Now, the reason behind the rise in target price was just a change in the cost of capital assumption. They are also mentioning that fundamentally and financially nothing has changed in their assumptions when it comes to Mahanagar Gas. Now, for first quarter, analysts are expecting a double-digit volume growth from the company, around 11 to 13%, but that is also because of a low CNG volumes in the base quarter. So nothing has financially or fundamentally changed for Mahanagar Gas currently. Also in the recent meetings, if you see, in which they met multiple investors in the US market, they were kind of optimistic about higher volume growth going forward. They're expecting volume CAGR of around 6 to 7% versus historical numbers of around 5 to 6%. They're expecting EBITDA margins to be around 11 rupees per SCM for the near term and around 10 rupees per SCM for the medium term. And they're also saying that there are multiple positive policy announcements that could come in, but however they are also uncertain on the timing of that going forward. So all in all, nothing has changed fundamentally or financially for MGL. It could be a technical move on the share price that we are seeing for the last couple of days for Mahanagar Gas.
Shibani, I wanted to listen to this small slice of the conversation we had with the Shree Cement earlier in the day. Clearly spelling out that yes, they are looking for buyouts, but they would go for smaller, fiscally prudent buyouts, if I may call it. They will not go for overpaying, for large inorganic kind of moves. And then we come back and discuss the cement space. But hear out what Mr. H.M. Bangur had to say about buyouts. They are not averse from it, but they would not overpay. They would be very thoughtful about what they are buying.
We are totally geared up for 80 million ton organically. Inorganic growth, we will be looking at it, but not very aggressively. If something comes up which is of right size and meets our overall demand, overall expectation and overall scheme of things, where we want to be in 5 years later, then only we will look at it. We will be targeting only something like 3 to 5 million ton with smaller companies.
Star Health, which is gaining almost 3% in trade, and also Religare Enterprises, where two stories are panning out. Look at that, days high, 3%. Religare won by 12th of July as per SEBI. the Burmans have to launch an open offer, but above that, there is also an angle of Max Bupa here. Both are health insurance. This one houses Care Health, Star Health, of course, we all know. And when Max Bupa is filed for IPO, these two stocks are suddenly buzzing in trade. But we were talking about cement space and potential smaller companies. Shibani, where do you see value? For example, I mean, there are stocks which are at over $100 a ton in the same space, like Ultratech and many others. Then there is a Mangalam which is at $25 a ton. This valuation gap, do you see this narrow going forward in cement space, and where will the money flow, to mid-tier or the larger ones?
So in the cement sector, this is a sector where consolidation has clearly been the the flavor of the day. Now, this consolidation we believe will continue. So if you look at the way the market share has panned out for the top 4-5 players, we've seen consistent improvement in market share, and therefore in this context, the larger companies seem to be clearly well placed, and this market share gain is possibly likely to continue. Now, because of this consolidation and M&A that we have seen, the smaller players have almost become marginal. So there has been huge amount of capacity addition that has taken place by the larger cement companies, plus the M&A activity that is going on within the sector. Now, from an overall sector perspective, one, we believe that demand remains fairly intact, both because of investment-led growth as well as real estate, which is showing up in terms of volumes being fairly strong and stable, despite the fact that we are now in the monsoon season, where typically activity comes off. The key factor incrementally for the sector will be pricing. Now, while demand has been strong and we have seen consolidation in the sector, pricing actions have been somewhat muted, and many companies have not taken price hikes or have not been able to sustain price hikes for a period of time. But this also comes at a point where input costs are fairly benign, and therefore from a margin perspective, with volume growth being strong and input costs being benign, margins are holding up well. For the sector, in terms of profitability, pricing is key. And what we believe is that if you take a slightly longer term view, with consolidation in the space, pricing should also follow through, and therefore profitability should improve. But net-net, we do believe that the larger players are well placed because of the kind of market share shifts that we have seen and the M&A activity in the space.
Okay, point taken. So that's the view coming in as far as cement is concerned and the consolidation that we are seeing across the board in that sector. In terms of some of the other buzzes in the trading session, in the last few minutes, KRBL has seen a bit of a perk up. Patanjali Foods is in focus. You also have Chalet Hotels, which has managed to perk up a bit in the last few minutes. And overall, Home First Finance has also been doing quite well for itself, and ditto can be said for JSW Infrastructure. Naresh, a view on some of these names, Home First Finance as well as JSW Infrastructure?
So, Home First Finance, starting with the stock has been sideways for a long period of time. If you look at it, the previous high was around 1050 odd levels in end of the year as well as start of it. Then 2022, roughly the stock was around 1000. So finally, the stock has broken out about those 1050 levels after being sideways. The only concern is it has moved up from 800, 850 where it was just a month back. So the risk reward may not be as great, but one could actually keep a stop loss at 1000 and still be long on the stock from here on.
All right. Shibani, we'll let you go on that one. Thanks so much for joining us on the show today.
If you like this video, then like, share and subscribe to ET Now.